The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, folks, we're going to start out the show today. I posted into Tiger TV a quote from Stephen Hawking. I'm sure most of you know who he is, the genius from London. And he's basically had Lou Gehrig's disease since he was the age 21. He was only supposed to live to 24, and now he's just a year younger than me. So he's really done an incredible job. I'm sure you've seen him on TV occasionally, but his mind is just really in a different realm than anybody else. He's certainly in the era of Einstein and others. But he makes a quote in there about all of our frustrations come from expectations that we have, whether it's about the amount of money we're going to make, what our children are going to do, what the markets are going to do, especially in trading. We expect certain things to happen, and that's where we get caught into these traps. And frankly, I've fallen into this trap myself with the Apple trade because I was really just trying to show everyone, the harmonics and the symmetry that was in Apple, from the very beginning, all the way up to the top and all the way down. All we were trying to do was to show you the geometry and the symmetry of these, and I got caught up in this price of $3.94 in the Apple, and that was really the wrong thing to do. I should post things in here to let you help yourself decide whether you think it's something that you have to do, because you're the one that has to take the responsibility for the trade, not for me. And that's all I can say about it. There's not much else I can say. But I will, keep an eye on the stock, of course. But from now on, what I'd like to do is I'll show you the things that I'm looking for, and, I'll answer questions about it and stuff like that. But to give a, recommendation, I frankly don't like to do that because then the expectations are there, and I don't like to have the expectations there. I practice a great deal mentally not having the expectations, and when I get caught up into it, it really throws me for a loop. Now, one of the things that I wanted to cover today is the fact about this Twitter thing that went on. There was a thing from the Wall Street Journal that really explained, what happened, that how computers are set up to catch keywords. I know that if you've ever seen the movie Enemy of the State with Gene Hackman and Will Smith, it shows how they're tracking, everyone. And it's really, really amazing. There's been several other movies that have come out about this too, about how Big Brother is looking at us either through, social networking or whatever they're doing. Is that these are things that when they catch a keyword like jihad or bombing or something like that, or explosives, then this triggers something, and this is what the hackers worked on. But it shows you in there the diagram of how things work and how they quickly track them. And we mentioned this on yesterday's show. We live in an electronic world, and we're going to see more and more of this. There's nothing else, that we can do about it. And that's just about the bottom line of, what happens with it. You can't really do much, more than that. That's pretty much what happens, and we're stuck with it. And unless you want to stop trading, it's going to have to be a situation that you've got to go with for some time. Now, I'm going to take a few minutes here and give a little education here because I know a lot of you folks don't trade Forex, and it's by far the greatest market in the world to trade, but I wanted to show you, how the Forex banks work. Forex banks are private banks. They're not regulated by anybody, okay? You have to remember that. The Chicago Mercantile Exchange, which trades futures on these Forex contracts, is a regulated exchange, regulated by the SEC, the NFA, and the what's the other one? SEC and the CFTC. So all of those are, they're under the regulations of that. They have margin requirements that are set by the exchange. The Forex banks are basically, private banks that set their own rules. Now, most of the quotes that you folks see come from the 13 major Forex banks, and they're averaged into a price. so you'll be able to see it. Now, if you'll take a look, when you go into Tiger TV, you'll see the Japanese yen versus the U.S. dollar, and that is one of them that is traded quite actively, the yen versus the dollar, and it's had that big move, from when Tom was talking about it, down around the 75 level, and, we've gone up to just about par. We missed par by just a little bit. And but what this chart shows, it's a 2-minute chart, and it shows you a lot of tails. You'll see these little shadowy tails on the candlesticks, and these are the bid and offers in the Forex market. That's showing the lowest bid and the highest offer for that 2-minute time bar. And how these banks operate is if you start putting your stops too close, you're going to get caught into this zone where they have all of these things happening, and they'll go down and hit your stop, and you're out, and then the market could move. So you got to be able to understand how these things work. So you don't want to put your stops too close. But remember, when you're looking at a Forex quote, you're looking at an average quote. When you're looking at the quote at the CME, you're looking at the actual physical bid and offer of what's happening at that particular time. The volume on the Forex is just about it is impossible to find because the Forex bank don't report it. But I can tell you this: it's thousands of times bigger than the U.S. stock market. So the amount of money that goes through the Forex is great, but they make their money on those spreads. Most of the Forex banks that I know, and I know 4 or 5 of them very, very intimately, and that is that they make their money by booking the trades. In other words, if you buy the euro, they take the other side of it. That's the bottom line. Okay, we got a call from our friend William in Singapore, and I will lay you 6-5 that the odds are that this is going to be about Apple. William, are you there?
Yeah, right. Yes, you're right, Mr. Pesavento. It's about Apple. Well, I heard you talking about Apple in the last few weeks, and I think a number of times you mentioned you are having a target about 395. So I've been monitoring, and I'm glad that I managed to take a long position, just a few days back. So it's doing well. I would like to find out, now Apple has reversed, from the bottom. Is it a temporary reversal, or do you think that Apple has reached a bottom?
Well, William, if I told you that it was a temporary reversal, I would have to, break you into a code of silence because I'm the only one that knows that, and I've been sworn by the exchange not to tell anyone.
Oh.
Well, William, I don't know, and the good part is nobody else knows either. All I know is that we had a huge rally after the earnings came out that were supposed to be bad, or they interpreted them as good, whatever it was, and the market gapped all the way up to 428. And then what we did is we came down to 391, and we've held 391 relatively well. The next target that I'm looking at comes in around the 420 level. I posted that into Tiger TV. That's nothing more than the ABCD that we made yesterday. We went down to 391. We went up to 415, then back to 400. That gives us a price of 420. And so I'd be watching 420. The problem is, William, is that they made that target of 427 too quickly. I was hoping to see that happen in about 7 or 8 days, but they made it in a few seconds after the report. And that skews everything because, you left a huge gap that was filled before the opening, and that changes it. The overall bottom at that 385 level, to me, is etched in stone now because if we break below that, that tells us that Apple is really, really bearish, and it's going to have a tremendous, even a greater move down. But right now, it's setting up really nicely. It's holding exactly where it should have held. And if it can just start trading normally like it usually does, it'll ratchet itself up, and then we'll get ready to go. It's the same thing that's happening in gold. Remember, we had the big washout in gold at 1322, and now gold has been, steadily, moving higher, each day. It's pulling back, but it's pulling back at the fib numbers, and then it, moves on. Apple should do the same thing. But if we go below 390, that's not going to be a good. It's not going to be a good sign.
So could I reasonably assume that, if it goes steady upwards, we might possibly see the bottom for a time being, unless something bad's coming up.
No, I think eventually that if this is a real bottom, we could see a minimum of 550 in Apple. Sure, that's just a 382 retracement of the whole move down. So we could see 550. That's only 100. $60 rally. If you come down, $400, you could certainly, $300, you can certainly rally back, half of that, which would be 150.
Right.
That'd be a 50% retracement.
Right. So in that case, I could go on long again. Well,
if you can stay long to 550, you're a better man than I am, William. I tell you, I would never be able to do that.
No, I'm just being lucky, that's all. And we're listening to your the show, and give me some hints, and I've been monitoring since then. Thank you very much, Mr.
All right, thank you for calling in, William, and I hope you enjoy Singapore. It's a beautiful place. We certainly like that. We've got a call coming in from Charlie in Atlanta, Georgia. Are you there, Charlie?
Yes, I am.
What can I do for you, my friend?
First of all, I want to congratulate you. You hit the Apple number bullseye.
You know what, Charlie? That's the first time I've done that in about 6 years. I'm glad you were the one listening. Thank you. Not that it means very much, but it does. The fact that it did hit that price was good, because I was under a lot of pressure if it didn't. Believe me.
It's always. I know when you're dealing with money, it's always pressure.
Yeah, for sure.
You said to me the other day that Google was going to go to about 811.
Yes.
And here we are right now trading at 811.
Yes.
And it bounced a little higher. And I looked at the relationship with, first Apple rolled over. The next leader that took off like a rocket was Google. Now it feels to me like it wants to roll over. So the question is, are we there, you think, in time? Should I be shorting now, or what should I be watching for?
Well, Google is it's higher price than Apple was. Google's at 811. Apple only got to 703, but we did make the butterfly pattern in Google. There's no question it's the same pattern that we had in Apple. Apple, when it hit 703, was hitting the same ABCD perfect pattern, just like Google did. We had the break, and then we had the rally in Apple. We're having the rally in Google right now. We were looking at 811.36, and so far it got to 816, and that's not very much when you're talking about an $800 stock. If we get above 830,
that's another bullseye, by the way.
Yeah. Well, no, we don't know yet. It's still too early.
Right.
The jury's still out on this little puppy. But if we get above 830, 835 in Google, that could tell us that this is wrong, and we're going to have another move to the upside. But right now, this is the snapback rally that you're looking for in Google, and this is where I would be looking to sell. And the reason why I would be doing it today is the fact that we have the lunar eclipse today, and we also have a full moon. And that's a pretty strong cyclical component. They worked pretty good on the 11th of April. That was a pretty good bottom that came in. But now we're coming in, 14 days later, and we're making what I think is a high on the new moon, or full moon. But we'll have to wait and see. We got to take a little break here, Charlie. Thanks for calling in, my friend.
Thank you very much for the information.
Okay, bye-bye.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, folks, we're back, and we're going to talk a little bit about gold now. I posted the weekly chart in there, and it shows that 1322 area that we hit the other day, and we've been having a pretty good rally. Now, what I would be expecting is the last time we had a rally, on this weekly chart, it went quite a bit. It rallied, well over $200 an ounce, and this would be in a bear market. That would get us up, all the way into the 1522 level, which would be just about the 50% retracement off of the last high. But we've got a long way to go before that point. But it is a very significant bottom that has been put in, as what I thought as we've been going higher, over the past 10 days. And one of the things that we were watching each time I've been on the show is we've been watching the higher bottoms that have been formed. And, of course, the important one that came in at that 1394 level, that sets up a price objective of 1480, and we're only $27 away from that. That's the amount that we've gone up today. We've gone up $29 today. So we could very easily be up at this 1480 level, very, very quickly. The thing that we need to be watching is when we're going to have, the first significant correction to the downside. We had a really good Gartley pattern, that formed down at that 1344 level. That was a 76% retracement. That was on the 17th of the month of April. And so what we're going to be watching is after this swing is finished, wherever it ends, is we'll be watching, for how the retracement comes down, because they come down, in the ABCD format, and so we want to be, watching that one, very, very closely. I think it's, important that we, keep an eye on that. Now, silver, by the way, the open interest in gold is starting to look really interesting because, it held up all during this collapse, and it's really been, been really amazing that the people actually were not throwing the towel in. We found out from some of our friends in Hong Kong that it's almost impossible to buy gold coins in Hong Kong. All of the suppliers are out. A lot of even gold jewelers have been hit with a huge amount of buying coming in from China from people that are actually, just buying jewelry just because they think the price of gold is low. Whether that's correct or not, I'm not sure, but that's what the news is, coming out of the Orient. But we'll have to, wait and see, what happens. I'm going to put the chart of silver and the chart of gold together on a 60-minute chart going back to where the bottom was made, and it shows you, the gold has been acting, much better than silver, but silver's starting to pick up steam also. It did hold that $22 per ounce level. That was the 1.27 on the weekly basis. So those numbers are, very, very important also, so we need to, watch this. But I think the key here is what the next correction is going to be. And we will have one because this is a bear market. And, the first, ABCD leg, you want to be able to buy that, whether it comes on a daily or an hourly. We'll have to wait and see. We've already had one ABCD in the gold and silver that held up pretty well, but we're going to get another one too. And Gartley said, to try to buy the ABCD moves in a bull market and sell ABCD moves in a bear market. And that's the, definition of trading with the trend. If you're buying higher bottoms, you're looking at an up market. If you're selling lower tops, you're looking at a down market. So this is what we're watching, with the gold and silver. Now, I want to show you a chart that is, indicative of what's happening here with the metals, because for the first time in a long time, we have a move in platinum that has held up very, very extremely well. If you look at this chart in the Tiger TV, you'll notice that we've had three major bottoms. One formed in December of 2011, another one in August of 2012, and the one that just happened recently. And each of those bottoms were just about equal down at the 1370 level in platinum. And then you'll notice that if you'll watch this very closely, you'll see that the three bottom pattern in platinum in both tops and bottoms have been very, very important. And believe me, platinum is far stronger than gold and silver because, we are really coming back rapidly in the platinum. Part of, these are very oversold under any stretch of the imagination, but platinum, held up the lows from last August where we shattered those in, both gold and both silver. We shattered the 2011 lows, but platinum held up, above that line. So that, something that is, very, very important in my opinion. Now, all along, we've been incredibly bearish. The copper market through for a very, very long time, ever since that channel had been broken, that rising wedge. We got to take a break. When we get back, we're going to talk about copper.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and we're talking about copper. We came down within 2 cents of what we were thinking it would probably get to. It went down to the 1.27 on the weekly chart, and after we broke those ascending triangles that we posted into Tiger TV, you can see those there. After those broke, they were really, really bearish, and now we're in the midst of a pretty good rally here. Maybe it'll start to follow the stock market. I'm not sure if that's going to happen or not, because the chart for copper long term is very, very bearish. But we are in the midst of a rally coming in right now. Now, I also posted the chart of natural gas as a request for someone. And I posted the weekly chart because we are right at the 786 retracement coming to this level, up into this $4.35 per cubic foot. And so we've basically, made some type of a top in here, and we'll be looking at it. Someone asked a question about the euro, and euro has been actually, we've been very, very fortunate today in the euro. We had a really beautiful pattern forming there, and I'll try to get that up here if I can. I know I have it somewhere. The question is I'm fast enough to get it up without it's really tough when you're Italian, because you can't walk and chew gum at the same time. And here it is. Just gives me a second here, and we'll be able to take a look at it, hopefully on a 60-minute chart, and get an idea of what's really happening here. Yeah, we did this. Okay, hold on a second. You'll see, oh, dear. Give me a second. I will get this done here, and we'll be all right. I think we're going to be okay. Anyway, today's high was nothing more than a beautiful 61% retracement of the previous high that we made way back on the 16th. That's all it was. It went almost exactly to the right tick, and my data is wrong on the euro on this particular computer. If you'll bear with me 1 second, I'll be able to do it. I'm going to put up the daily here. Hold on a second, and we'll see it a lot easier. Yeah, we can see it pretty easily because the retracement today, and you'll see we've had a very wild day. We've dropped well over 100 and some pips in a matter of a couple hours after we took out the highs of the last few days. I really believe that we're looking at the minimum of 120, 129 in the euro. That we're trading at 130 right now, and I believe we're going to go at least to 129, and that's near the 61% retracement of the whole move from March to April. So that's something that I'm looking for. The same thing in the pound. I think the pound hit a pretty significant point today. In fact, it made such a beautiful ABCD pattern in the pound. I have to put this up, and hopefully it'll be yes, we were able to get this in here today, and we'll put it up and show you folks because it hit it right on the money. I mean, it was just as if just had a little magnet there, pulling it to that price, and it was really a beautiful ABCD pattern that formed. I'm going to put that in here in the Tiger TV, and you can see that beautiful ABCD correction. Now, this is out of Gartley's book, folks, and Gartley said to sell the first ABCD correction in a bear market, and this is an ABCD correction in the bear market. I know it's hard to believe that it's a bear market, but it is. I mean, it's gone from 163 down to 147.5. And now we rallied back to 154, which is the 382, and this is where you want to be looking to sell the British pound. This was one of the trades that we were looking at for today. We were watching the pound and the euro because we watch those, every day. And of course, we're also watching the Japanese yen, and that trade is still in progress. And I would like to show you that trade because it's very interesting, what we have here because of. Give me 1 second here. Here I'm in the process of pulling this up. I want to show you two things that I think are important. Okay, first of all, they're going to be on the same chart, so you'll be able to see it. And then I want to do a longer term chart. You'll see this is a little cluttered. It's a little cluttered right here when you first look at it. But if you just watch the red line, which is the Japanese stock market. And you'll see how the red line has gone higher than the Japanese yen. Just recently, we've taken out the highs from early April in the Japanese stock market, where we've made a double top in the euro, in the Japanese yen dollar index itself. And so, what we're watching today is, in fact, you can see it happening right now. Is that we're watching the retracement that is occurring in the Japanese yen. Oh dear, 1 second. I try to prepare these things ahead of time, but when my little clicker doesn't work the way that it's supposed to, I better rephrase that. Okay, here we go. We're going to put this Japanese yen chart in here and show you that up at this 99.44 area was the area where we're snapping back, and we think that there's a possibility for the yen, to go down from here. This is a good way of trading the Nikkei Dow because there's a correlation of about 98% on the Nikkei Dow versus the Japanese yen. I'm going to show you this correlation. I put it on that chart, but I want to show you the, oh dear, just a second. I got sugar chart up here instead of the NASDAQ or the Nikkei. But this is what's really interesting today is that we hit the exact 61% retracement to the exact penny on the Nikkei Dow today. It's trading exactly at the 139.75 was the exact 61% retracement coming off the high from 2007, and the market hit that and then sold off about 100 points, which isn't much in a $13,000 contract, but it tells you that we're at a real critical level here. So at this particular point, the risk is very, very small. So in order to take advantage of this, instead of trading the Nikkei futures, which are very, very illiquid, we will be looking to do the Japanese yen versus the U.S. dollar at 99.44 and using a 60 pip stop on that because it has that much volatility. You have to risk about $600 in order to take advantage of something like this. So that's what we're looking at in this particular trade that we're doing right now. Now I do want to mention something here. I know you folks are always out looking for bargains, and we've got one setting up. It's not ready yet, but we've got a chance, and that is the sugar market. I don't trade sugar very often, usually about twice a year, but what we're seeing right now is that we have made what I think is a significant bottom. I mean, it rallied. The last time we had a bottom, we rallied just about $1,000, and the margin on this is very, very small. But now we're down at the 1723 level in sugar, and if we can hold this 1723 level in sugar with the gap down that we've had today, we've got a really good chance for sugar to have finally some type of a rally. But overall, the market, is incredibly bearish. But sugar trades, really nicely on the numbers that we deal with. I mean, it really does a beautiful job. I mean, there's no question about it. I'm going to put the longer term picture in here so that you can see the long term sugar chart going back about 18 months, because you'll get a better idea of where we are. We're still higher than we were in 2010, which is a good sign. And we did have the gap down today. And we have some good volume and the market doesn't follow through, you're going to have a very easy place to buy sugar. What you'll be looking for is for sugar to gap up either on Friday or Monday. And if that happens, then we'll be able to, take a look at it. Someone said, would you be buying calls in the sugar? Folks, let me explain to you. If you ever go to Chicago and you go to Chicago Board Options Exchange, they have a visitors gallery there. And you can go in there and look around and see. And you'll notice that these folks on the floor there, they either have little decals sewn into their jackets or they're wearing big pins, these like election pins, and it says, sell an option, buy a Mercedes. So basically what you want to do is learn to be an option seller because, this is a premium business. And if you buy a put or you buy a call, you really got to be right on your timing. Just look at this Apple. This thing, I had it pegged pretty well, and yet the option didn't do very much at all. The stock's done great. It's up, almost 20 points. Was up 40 at one time, but, the options are tough because of the decay value. So learn to be an option seller. That's where the real game is. 85% of all the options expire worthless. So, do something that has some value, and that is learn to be an option seller. Learn how to sell calls and learn how to sell puts. But believe me, that's a real education. That is something that's very sophisticated and something you must know, hands down, really, really well. Tom O'Brien does it incredibly well. The fellow that does I can't even think of what, not Nanex, I can't even think of what it's called now. But with the option seller, that's how you do it, is you learn how to work that spread so that you can sell an option and take the premium in. You're not going to make as much, but you're going to make money consistently, and that's the whole, process of, being in this business is try to be consistent, and make money on the things that you're trying to make money on. Now we want to get to the grain markets. We're having a little bit of a move today in the grain markets. We've had a nice little bottom form, very, very short term, I might add. We're having just a very, very small rally, which is what we're looking for. We eventually think we're going to go a lot lower in the prices. I think that we're going to be looking at we're going to look at spot corn first, which is the nearby corn, and then what we're going to do is we're going to look at the new corn, which is the December corn, because these have come down quite a bit. I think we're getting close, but the time is not right. We were waiting for May to come around, and this is what we'll be looking at. Now we have another eclipse coming in on May the 10th. And then we have another one coming in on May the 25th. We got the solar eclipse coming in on the 10th, and then we got another lunar eclipse coming in on the 25th of May, which is, quite unusual. But that's going to happen again in May. And so what we'll be watching is if these lows are going to hold, or if we're making new lows around that time, that will give us a spot. The reason why we're looking at that is last year, before the drought happened, the the bottom of the corn market happened on Memorial Day. So sometime between in the 1st of May and the end of May, we're going to be looking for a pattern here to try to enter the corn market and hold it for a long time. We're going to use the futures because at that time the prices are going to be relatively cheap and the margins will be very, very small. It'll be like probably $1,500 or $2,000 that allow you to be a farmer and own 5,000 bushels of corn, and it's selling at $6 a bushel, so you're going to control about $30,000 worth of corn for a period of about 4.5 to 5 months. And the theory is that we've never had a year where we don't have at least 1 or 2 crop failures. And since we had a bad crop failure last year, those memories are still in the minds of all the corn traders. And so they'll be watching for any signs of a potential, bad crop, coming in. So far, they're just barely getting the corn planted because it's so darn wet out there in the Midwest. It's very difficult. So they've been planting, more beans because the corn is a little late already, which is a difficult thing to do when you're a farmer. You got to get the corn in by May 1st, or you're looking at some real serious problems. Now, the next one that we're going to be looking at is you're going to see a totally different picture because this is new crop corn. This is December corn. This is the corn that will be harvested in October and November, and that's known as December corn, new crop corn. The one that I just posted is old crop corn. That's May and July corn. And so what you're looking at here is you'll notice that we made a big ABCD down in December corn. It came within 1 penny of the exact low, and we've rallied, probably 12, 13 cents, which isn't very much. But at least we're starting to form a bottoming process in the corn, and that's exactly what we're looking for. We've been waiting for this to occur. It's starting to happen, and then eventually we're going to get to the point, where we're going to be able to buy something and, have a good place to buy it without, risking, very much. That's the whole key of all the things that we're doing when we try to do these things. And that's we don't always do it that way, but it does work. Now, I did want to mention the cattle because we've been talking about cattle for quite some time, and, we thought the bottoming process and cattle was coming in. We've already started to turn up. We got a call from Wayne in Texas. Are you there, Wayne?
Yes.
What can I do for you, my friend?
I wanted to check on ISRG.
That's Intuitive Surgical, right?
Yes.
Mm-hmm. I know somebody that was involved at that at the very, very beginning. He's a ophthalmologist. I don't know what Intuitive Surgical does, but I know that they've gone ahead a heck of a move. That's for sure. What is the question that you have? You want to know where it's going?
Yeah,
I think it's going lower. Let me post the chart for you. It's got a beautiful ABCD that came in right at the high. I mean, it stopped within about $15 or $20. It's actually $20 from the all-time high, and we've had an ABCD down. But basically, I think we're going to. Wow, this is really. Can you bear with me here 1 second, Wayne? Because I want to show you something that just happened in this stock, and I don't do stocks very often, but I wanted to show you this because it gives you an idea. I'm going to post the same chart and just show you in 2011 we had a similar correction that stopped at the 475 level, and that went up to the ABCD. Wayne, you've got to stay with me for a second. We need to talk about this because it's not so much about trading it, but just the technical aspects of it, okay?
Okay, thanks.
Okay. 877-927-6648.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, Wayne, are you still there?
Yeah.
Okay, Intuitive Surgical. I posted the final chart. I put 3 or 4 of them in here because each time I looked at it, I saw something even more predictive, and that is it. Just write this down. If it goes below 450, it could come all the way down to 245. It could drop $200 without any trouble at all, just like Apple did. The reason why is it hit a beautiful ABCD 2 weeks ago at the 463 level, and we tested that just 2 days ago, and we're having a little bit of rally. But if we go below 450 now, that's going to set up a break just like we had in Apple, and that means that that pattern is broken. And believe me, we've not made new highs with the rest of the market. This has been a market leader up until, March of this year. And since that time, it has been lagging the market a little bit. So that's one thing to be worried about. And the second thing is if it breaks 450 a share, Wayne, this stock is probably going to go lower. So 450 is the key thing to look at.
Okay.
And I put my limit minder in. I don't follow the stock, of course, but I will, if it hits it, we'll bring it up again and see if it holds. But we could get a pretty good rally. Could get up to 543 without any trouble if it can hold these bottoms. But below 450, is not going to be a good thing. That's like Apple when after it made 703 and broke, I think it was 660, was that had been an important support point, and once it broke there, it was Katie bar the door to the downside. This had a heck of a run. It's gone from $70 a share up to $600 a share, so it's due for a pause anyway.
Okay. Also, I was going to say on the Apple, I started selling calendar spreads on those June up, and just letting it expire as it grinds up. But it was a good call. I've never seen a stock go up that much in the after hours and then go down.
That was really surprising to me. I didn't particularly like that myself because I was getting emails. Everybody was saying, "Oh, how much money I'm making," and I said, "Oh dear God." I said, if this is almost a surefire thing that it's going to back off, because people, once they start counting their money before they've closed on a trade, that's a disaster. So, I don't like gaps, but they do occur. So what are you going to do? That was a monster gap, considering that the news was not that good, But that's the way the markets act.
Okay, well, thanks.
My pleasure. Okay, folks, we're going to end the show here. We've got just a couple of minutes to go here, and we're approaching the S&P's still way under the highs that we made last week. It's still 10 points under the high. The S&P cash is already above the high. The Dow is also above the high. The New York Stock Exchange Index is still holding. The NASDAQ is still holding, but just barely. And we've got this full moon and lunar eclipse, so we'll see, what happens with tomorrow's action. But I think we're going to see some increased volatility. We're starting to see it already. Apple is one of the keys, and there's some others, so we'll have to keep an eye on it. But remember, you got a lot of people that are along these stocks because of the bullish consensus is so high, and that the eclipse comes in this afternoon, not in our hemisphere, as I recall. So it's today, the 25th. So I think we're getting close to the end. No more questions coming in. So just remember that we'll have a pretty good volatility coming in on Monday, and we want to be watching it very, very closely. But we're going to watch the pound, the yen, and the euro. Those are the ones that we really got to keep an eye on in the currency markets, and of course the gold, if gold can make that 1480 level. Live every day in an attitude of gratitude, and may God bless.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.